Ryaad, welcome to our podcast.
Thank you, Ron.
It's a real pleasure, and I know that you're not usually very present on LinkedIn and social media, so I'm very grateful for your time. Ryaad, I think you're one of these rare people in Mauritius who I know you've been doing tax forever, since 1996. So why did you choose a career in tax?
Probably that's something to do with my two lecturers back in the UK, probably 1994, 1995. They were both very passionate about taxation, and one of them was a part-time practitioner. So he used many examples of case laws, and whenever he lectured, it's like with great passion, and he knew all the case laws, and we explained to you how he defended cases. I mean, that was like extremely impressive at that point of time. And then he was the one who asked me to do the ATII taxation, the Chartered Officer taxation examination. Then there was another guy in London. He too, like, very passionate person on taxation. So probably those two gentlemen. And I was never interested in taxation, in finance, so I wanted to be an artist. Still want to be an artist. That's all. Yeah.
You mean an artist that paints or singing?
And then lately, doing leather work.
I didn't know that about you. Okay. Is that something that you might consider to do after you retire?
Probably when I retire, that's what I'll do.
Okay. So when you then came back to Mauritius in 1996, how did you find the tax landscape then?
It was a bit of a shock with me because what I learned in the UK, where in fact the ATI exam, it's an open book exams. When I arrived here, there was a change in the law, and I think there were like 163 sections, and when I read the new legislation, there was no regulations, so it was complicated for me. So I asked the partner then, how do I compute the car benefit? So he said to me, it's 1,000 rupees per month. And where's that authority for that? Nowhere else.
It's just a practice.
It's just a letter somewhere else. So it was complicated for me to adapt. And it took me like, I don't know, at least a year to settle in Mauritius. So it was really complicated. And during those days, we didn't have any internet and no proper library. So it was quite difficult for me, to be honest with you. At some point, I wanted to go back. But then, I thought about the family aspect. I decided to stay and give it another try.
In a way, I mean, things have, obviously we have technology now, our tax laws have become more sophisticated, but it doesn't necessarily follow that things have become easier. I think in many ways it's become more complicated, right?
I mean, the degree of compliance have increased dramatically. I mean, and today all those big groups, the tax is one of the items in their agenda. I mean, at board meetings, that wasn't the case previously. At the same time, there are some pluses and minuses. I wouldn't say that it's just negative points. As you know, in 2006, I think, we introduced a group relief in the transfer tax legislation. So that was welcoming, and still we don't have it for income tax purposes. Now, you've seen it, loads of MRA audits, and where it gets frustrating is the bit where they don't understand the commercial aspects of transactions. And when you compare that to the practice, when you read case laws outside Mauritius, it does get really frustrating. And it's complicated for us. You can't tell your counterpart at the administration that, well, you don't know your stuff. If you do that, you're dead for your client. So you have to work in the best interest of the client. So you have to deal with this in a very mature way, at the same time not prejudicing the interest of your clients. So it comes with experience, but at times it can be challenging, and I'm reputed for being a very quiet, shy person.
Yes.
But with the MRA, I'm another person.
They see a different side of you. And talking about experience, I think one of the challenges that Mauritius is facing is the human capital to do the work. Have you found that to be a challenge in your area? How do you get the young professional to be interested in tax and to have a career in tax?
The only thing I can do, I think it's on the weekly trainings, where I explain them. I take my time, simplify the laws, compare the tax laws with day-to-day examples. That's the only way. I mean, I'm very close to the team members, make it interesting. And I always tell them, if you do tax, And if you're married, off your spouse is tax. Otherwise, don't do tax. Go to another service line. So that's been my motto to the team members. It's challenging, yes, because you don't find the right resource on the island. And probably we are lucky, we can compare Mauritius with other practices, India, China, UK. Then we can see the difference. But at least from my side, to the extent that I know that I'm doing my best, that if team member leaves, and I accept it. Sometimes like 2 hours on a weekly basis. But I don't, I'm happy with it because I know that whatever I know, I'll explain it to all them.
You pass on.
Yeah, it's there and it's up to them now to see how do they wish to deal with the information, the explanations, the discussions. It's up to them.
Do you come up with the topic that you choose on a weekly basis?
Not necessarily. Sometimes while walking in the room, I think of a topic and then we expand on it. So if you wanted me to redo it next year, I won't be able to do it because I just develop the case study with them. Sure. So I prompt them to think. But Mauritians, we have a big problem in our system. They don't speak up in the trainings. So I have to force them to speak.
Yeah, you have to call out the names and get them to.
That's another challenge. But then you try to make it funny, do some jokes. Then at least you can get their views.
Yeah. And I think that one thing that we have to teach them as well is that, and it's not ingrained in our education system, is that sometimes you think critically as well, because tax is so different. I mean, I don't know about you, but a lot of the cases that we get, they're very different from each other. So you will rarely have two cases with exactly the same facts. So there's only so much that you can learn in a book.
I mean, I do explain to them that, look, you need to look at all the words in any sections. I mean, if you talk about things like claims, deductions, elections, it may not be the same. You might have the same outcome, but these are the things that as a tax professional, you need to understand what's the implications. Mm-hmm. Like if you compute an allowance, is it a claim or is it just a computation or is it a deduction? It might have different consequences. Yeah. I mean, it's those little nuances I think we need to be aware of. Like what's the trigger for Registration Duty Act, VAT Act? I mean, and if there's a change in shareholding, does it affect my VAT position? I mean, it's basic, but still not quite grasped by the young team members, and you need to explain to them.
Yeah, and sometimes, you go into a client meeting, we obviously are not meant to know everything, but sometimes clients expect us to know everything. So then when they ask you a question in a meeting, you're expected to know the answer. So in a way, I mean, it's not always possible, but you need to be able to think on your feet as well.
At least you're aware. I mean, at least you have a sense
what the broad issue is. Yeah.
Let's say, for example, I mean, these days you find many structures where Mauritian companies employ non-citizens working outside of Mauritius. Mm-hmm. Then you also, well, what would be the applicable employment legislation? Is it the Mauritian legislation or the legislation of the country where the duties are performed? I mean, we're not lawyers, but then at least you must be able to know from a broad perspective, what will be the implications? I think things like that make a difference when you have a discussion with a client. Yeah, I mean, you can always caveat it to say, well, you have to
double check
with your legal team.
Yeah, absolutely. So Ryaad, I wanted to discuss in particular today the Inodis judgment, which has, I think, set shockwaves across the tax community in the past few weeks. EY did a very, very good commentary, I found. I think it's probably the best one on the market that I've seen. So I wanted to delve into that a little bit. So to take a step back, I mean, just to simplify facts, Inodis made intragroup loans to 5 subsidiaries. The MRA imputed deemed interest on those loans. The ARC agreed with the MRA and the Supreme Court agreed with the ARC ruling. Now, a lot of us in the tax community feel that there's several angles on which you can approach that judgment, but let's take one step at a time. So my first question to you is a loan always a loan? So a loan for accounting purposes, is it always a loan for tax purposes?
First of all, Rana, I think we just need to look at the facts and circumstances.
Sure.
We are saying it's a loan, probably the reason being for accounting purposes. We need to describe it. It's not a capital because we don't have any share issue, we don't have any right issue. So by default, it's a loan. But if you read all tax systems, I mean, you know about it. we look at the facts and circumstances. What is clear, funds have been transferred from Inodis to its subsidiaries. And all intercompany arrangements, it's the same fact pattern. It's not tax driven at all. That's the fact, and I like to do that comparison. If we compare it with a natural person, it's like the mother giving funds to her kids. Is that a loan? But that's like individuals, we don't need to report. But now we are in the situation of a group of companies. We need to prepare financial statements according to standard accounting practice. So we need to describe that transaction. And to the extent that there might be a repayment, that's why it's described as a loan. But most importantly, when we talk about arm's length, Section 75, the very basic principle is you need to look at it from the perspective of the other party. And here we have 5 subsidiaries. From their perspective, is the loan. And in all cases of deemed interest, unfortunately, everyone just look at it from the perspective of the lender. So if it's not a loan, what is it then? Probably it's like a contribution to capital from a substance point of view. And we like the discussion of substance reform, which is in our tax laws many, many years ago. So that's not new. So if we apply a substance versus form approach, it can't be a loan. And it doesn't matter if the lender is not the holding company, it might be a rated company, same analysis. But the only point on this one, I think it's clear from a substance perspective, it's not a loan, right? Probably it's a capital, even though we don't have any shares. Then that might impact on other legislation like Relation Duty Act. If we see that it's a loan, it's not a loan, then over there we can't treat it as a loan. So there is that minimum consistency. I know it's separate, but it's something we have to bear in mind if we are convinced that it can't be a loan.
And I think that one thing that you mentioned in your commentary is that I don't know whether they existed at the time, but there are the OECD TP guidelines, and actually the updated ones were released in January 2022, dealing specifically on financial transactions that described some of the characteristics that would point an arrangement being quasi-equity as opposed to being a loan. Did you see any of that discussion in the judgment?
None. I mean, in fact, Ron, even if one argues that at that point of time, that guidance wasn't in the OECD transfer pricing guidelines, there was still a comment in the commentary in the Model Convention, Article 9, which talks about looking at it from the perspective of the borrower, which is clear, which is picked up by that new chapter, I think in the second paragraph. So we don't have to wait for that guidance to be able to understand from the perspective of the OECD. So that's a bit disappointing because they did not refer to any external materials. And I think I made the point that the OECD papers, whatever guidance, it's released after substantial consultation across the world. And those comments made by various stakeholders, they are on the website of the OECD. So it's very transparent, and any document which is released has been subject to a detailed consultation. So if there was one place which the judges could have referred to, well, it's the OECD. I mean, the guidelines, it's legislation in many countries. I mean, that's a big disappointment.
Yeah, and it's clear, as you said, it's clear for all to see. And I think the other point as well, and I'd like your views on that. A lot of people say that Section 75 is comparable to the corresponding article, I think it's Article 9 in the Model Convention. But unlike in the Model Convention, there's no mechanism for a corresponding adjustment. Do you think that means that it's implicit in Section 75, or do you think Section 75 ought to be amended to make that clear?
I think it ought to be amended, Joan, if we want to achieve an outcome where double taxation doesn't arise. But most importantly, I think, one, Section 75 is an anti-avoidance legislation. So one must establish that intention to avoid income tax first, then you can invoke it. Secondly, we do have anti-avoidance section on interest in Section 19. Section 19 is about interest expense, and we have 2 anti-avoidance clauses there, which is clear. So interpreting Section 70 in isolation is not a complete analysis. We have to look at the other anti-avoidance sections as well. So I don't think we need to include that clause, Ron. I don't think so. I think we need to understand the impact of the other anti-avoidance section first. I mean, to start with, you look at Section 19(1), to be able to deduct interest expense, there must be a corresponding taxable income. And I think there, the ruling in the Owodally telegraph case back in 2011 that talks about that expense, which I think is right. That's the right analysis. And I know there might be some debate on the quantum of the interest expense. That's another discussion. But as a matter of principle, I think that ruling in Owodally telegraph is the right one because it's clear. We don't have any anti-avoidance sections on interest income, interest-free loans. We don't. So that's the only section which potentially can apply on an interest-free loan. But then it cannot be interpreted in isolation. I mean, it's complicated because if you say that, well, I'm going to grant a deduction, then how do you reconcile that with section 19(3) where it says that it has to be paid in cash?
In order to get the
deduction. There would be a disparity amongst companies.
Yeah. So then you do have the economic double taxation.
Yeah, we do have it. And when you know it, we have many structures where you have multi-tier structures. You have interest-free loans going through 5 layers and you end up with taxes on fictitious profits. That's not consistent with the economic profit. Sure. And that's not good, I think, from a policy standpoint.
And it's a slippery slope as well, and I think that one concern in the market as well is that it could set a dangerous precedent for future cases. I think there are a number of cases awaiting at the level of the ERC who were waiting for the Energis judgment. So I don't know if the taxpayer is appealing. I presume they're not.
The ones I know, I've recommended them to appeal. I mean that's been my message all the way through.
Yeah, and I think the other interesting aspect that you mentioned as well, which I think a lot of people don't necessarily think of automatically on Section 75, is that there are some conditions that have to be met in order for Section 75 to bite. And one of them is that it has to be in the context of an income earning activity.
Yeah, exactly.
Again, did you see that analysis
No.
in the judgment?
I mean, it's just an interest-free loan, and this is not in the money lending business. Even principally, it's not in the money lending business. At least if one could establish that part of its business was money lending, then it's fine. It's like a bank doing a related party transaction, and the interest rate is not at arm's length. That's understandable, and we agree with that. Because it does say all the subsections, business or income generating activity. It's clear. I mean, that hasn't been addressed at all in the judgment.
Yeah. Do you think it's time to have some sort of TP regulations or guidance in Mauritius, given the uncertainty in that space?
It would definitely help, but then I would prefer that it's sent to us for consultation, and then it's updated regularly. If you read the regulation, even the Act, sometimes it's not updated. In some of our decisions, we talk about the Financial Services Development Act, which has been repealed. I think it would help, but we just need to consult on the documentation. I mean, I think if you look at the ones in Singapore, I think we can use that as an example, and it's updated regularly. I mean, and it's in simple language, and it does refer to the transfer pricing guidelines, so OECD transfer pricing guidelines. So I don't know why is it that we are waiting. I mean, that would have helped a lot.
I mean, the announcement was made, I think, a few budgets back that regulations or guidelines will be put in place. They're still forthcoming. I don't know.
I mean, at one point, our government, I mean, not this government, previous government announced that we'll have a group relief. I mean, never happened.
Yeah, I think group relief is definitely that's one of the things that when I moved back to Mauritius that surprised me that we didn't have. For me, it makes sense. It's common sense.
I mean, it got worse, when we changed the law on losses previously were you were allowed to carry forward indefinitely.
Yeah.
Now we have
really?
Yeah.
Really?
Now
okay,
we have 5 year time limit. Yeah. So with that restriction, then we needed to have the group relief, and we don't have any loss carryback. So that's grossly incoherent with the economic aspect of the profits made by entities. Yeah.
And of a business as well. I mean, it could take up to 10 years for a business to start making profits as well. And it's
especially, for the past 2-3 years with COVID-19.
Yeah. I think another aspect of the Energis judgment that I think people didn't maybe focus on because the spotlight was on the interest-free loans, but there's also another very important aspect which I think many accountants are saying that is wrong on principle, is the accrual of the passage benefits. Could you tell us a little bit about that?
Accrual is conceptually different from provision, and in that case, the quantum of the passage benefit expense for accounting purposes, that was a figure which is known. It's not like an estimate. The entity knew about the eligible employees, knew about the amount. Even though you may not travel, you can cash in. It was a number with certainty. I think the minute you establish that, then it's an accrual. It's not like you're saying, well, I'm not too sure if I have to compensate any employee that would retire or something like that, where the degree of uncertainty is high. I mean, here it's known. You know, you have your
if you don't take it, you get the cash.
Yeah,
basically.
you get the cash. So it's still an obligation. The minute you establish an obligation, then it's an accrual. The Supreme Court should also understand what will happen from the income side. How do we tackle it? How income is taxable on an accrual basis? So we need a minimum consistency on the income and the expenditure side. Yeah. So otherwise there would be a huge mismatch. So that judgment saying, well, you'll get it on a cash basis, which is wrong.
It's wrong, and for accounting purposes, you don't operate on a cash basis; it's on an accrual basis.
Because that amount expense, it decreases your retained earnings, and therefore decreases the quantum of dividends you can pay to your shareholders. There are ample case laws in other countries on the interaction of accounting standards with the tax laws, and if the tax law is silent and doesn't quite explain what is it that we mean by accrual basis, then we go according to accounting. In some countries, even specific provisions in certain sectors are deductible. Here, it's not a specific provision. I mean, it's clear to me.
From memory, there are rulings that confirm that generally you would follow the accounting treatment.
Like I think one of the earlier rulings on zero coupon bond on the deductibility of interest expense, where they always said if it's computed on accrual basis, it's deductible.
Exactly.
So there are rulings.
And are you aware whether there are other cases, whether at the ARC or otherwise, on this point, on the passage benefits? Or was that a test case?
Not on passage benefit. We had one on expenses, and the argument was, well, we've checked the tax rate of the counterparty. It's not been reported as income over there, and therefore we're going to deny you. So we'll grant you the deduction when the other party reports it as income. Well, so we explained, well, do you think we have to check the tax in
every single time?
It's complicated.
That's
not proper tax administration.
Yeah. So that is frustrating as well. In this year's budget, I know you probably do write representations every year, and you probably have a bucket list. If you were to choose, let's say, 3 tax amendments that you would like to see in this year's budget, what would they be?
Complicated for me. I think one is simplicity. There are too many at times section regulations that has to be harmonized. 2, I think we just need a minimum coherence between the various legislation. I mentioned it earlier. We have group relief, land use taxes. We don't have in the Income Tax Act. At least in the Land Use Taxes Act and Relation Act, where there is no change in the effective shareholding, you don't pay any tax. And I think it's high time that where one treatment affects the other, like share valuation for the case on interest-free loans, if we say that it's capital for income tax purposes, then let's be consistent. So I think that interaction between the various fiscal legislation, I think that is something we just have to polish it or make it better. In terms of changing tax rates, probably I would suggest let's have one tax rate. Even though for companies, you might say, well, let's have it at 17%, all companies. Because when we have varying tax rates, you end up with tax arbitrage. We don't want that. Yeah. If you had one run rate, it can be 15, it can be, 16, whatever rate. But one rate for all persons, including individuals. And I think the other thing is we should eliminate those 2 incentives, to my mind, for GBL companies. One on CSR, other one on outgoing interest, so that it's one set of rules for all companies. Because otherwise, in the long run, we won't be able to sustain the GBL.
Yeah. I mean, sooner or later, the ECD will catch up with that, because the CSR falls within the definition of tax.
It's an income tax.
Yeah.
So many countries, within their domestic legislation, the minute that they say that we are using a GBL, and they know that it's not taxed as a other residence, that entity will be kind of blacklisted. Sure. So we have to make sure that all entities are taxed in the same manner. So that alignment should be done ASAP to my mind. I've been saying that for the past 20 years. Nobody listened to me, but those are the things that we should do. I think the other thing I want to say is government, Minister of Finance, we should just do more on consultation, even the MRA. Whenever a practice notice is issued, I mean, why don't the MRA consult with us? I'm not saying it should be me. It can be anybody in the private sector, business sector. That consultation, we need to do more of it. Yeah. And that would be beneficial for all of us. Yeah. For the MRA, the policymakers, us practitioners, the business community, so we can only win with such an approach.
The MRA is very efficient as a tax administration, but they don't do the deals on a day-to-day basis. So I think, so for example, if we look, I mean, that's another discussion on its own. If we look at the statement of practice on the infamous partial exemption, particularly on interest income, when you look at the examples that are given, I mean, there is a mismatch between the reality of what's happening in investment holding companies, for example, trading companies, and what the statement of practice says. So a consultation might have helped to narrow down the issues at least.
Yeah, it would have been better, I think, to all of us. Yeah. But I think, honestly, that was prompted by the fact that they realized that
people were claiming it.
Yeah. I mean, it wasn't supposed to be like that, because it's clear to us, to all, that the amendment was supposed to apply to all companies. Yes. I mean, that was a bit surprising from their side. I think that's the reason why they issue it. But and when you read it, like for dividend income, it doesn't help at all. Having adequate resources in Mauritius to manage equity investment. I mean,
what does that even mean?
What are you looking at concretely? Yeah. Would the management control be sufficient? I mean,
exactly.
It doesn't help at all.
Consultation, I agree with you on that, and hopefully some time to consult over the finance bill as well.
Yeah, exactly. Yeah, I mean, I think all the regulations, the finance bill, that has to be circulated. I mean, just we have the technology today. It can be done on the website.
And we don't, I mean, our suggestions don't have to be taken on board, but at least if we have the opportunity to present some commentary.
And most important one, if the MRA or the policymakers, if they don't agree, at least be transparent, give us the reasons, and I mean, we may be wrong, I don't know, but at least we know where we stand. That transparency is lacking in this process, I think.
Okay. Last question for you, Ryaad. So hopefully you still have a very long way to go in your career, but if you were to advise a young professional who's now starting tax, and you had one piece of advice to give them as to how to be a good tax practitioner, what would be the one piece of advice that you would focus on?
Listen to your client first. Understand the transaction first. Don't jump along and say, well, you such and such section, or permit you to deduct such expenses. Listen to the client. The client knows the business. Then try to align the tax rules with the commercial rationale. I mean, that's the one bit I think which many tax professionals miss. They say, well, that's the income tax act. I'm not bothered about your business. I'm not bothered about the Companies Act. I'm not bothered about the accounting standard. I mean, you see it in Pillar 2, that interaction with the accounting standard. More and more, we need to understand the impact of our IFRSs.
Yeah, absolutely.
And keep learning. I mean, that's the only way. I mean, if you don't want to be working in a dynamic environment, don't do tax, do something else.
I mean, it changes every year, that's a certainty.
I mean, you have to love it, otherwise don't do it.
I agree. Well, on that note, thank you very much for making the time, Ryaad. It's been a pleasure.